Okay, we are live. Good morning, good evening, good afternoon. So right now, good evening from Texas. In 1 second. All right. YouTube. We're going to share this.
What you trying to share?
Trying to share the live. There we are.
What you trying to share?
Trying to share the live. There we are.
What you trying to share?
Trying to share the live. Thanks again for joining us for another episode of the Child and Dependent Care Credit. So first and foremost, we want to apologize. We've been, I think, about a week late on both days, Tuesday and Thursday. Well, as you all know, it's the season, and we wear a lot of hats, so we've been so extremely busy. And we did say from the beginning, whenever we have the opportunity to come out here to edutain you guys, we will do that. And so we are doing that now. So forgive us for the past week or so. Time has not permitted us because we were extremely busy with other things. So anyways, we are back. And tonight we'll be continuing with the Child and Dependent Care Credit. Child and Dependent Care Credit. I almost said service.
Okay.
Okay.
Discovery Tax Services.
So, well, we're Discovery Tax Services, and we provide services. And once again, this is just for information purposes only, guys.
Right.
This information that we share here does not intend to solve
If you
any
need advice or you need
any-
to solve tax problem, contact your tax advisor, or you can reach out to us.
Yeah, so yeah, reach out to us again. Check with the on the IRS website as well. Again, this is not to solve any tax problem you may have or any tax issues you may have. Okay,
Information purpose only.
For information purpose only.
Okay,
Again,
let's get to it.
All right, we are once again your partner in all things taxes and bookkeeping and so forth. So if you need any help, have any questions, feel free to reach out to us. Our goal is always to just inform you, educate you so that you can make an informed decision when it comes to your taxes. Okay. So with that being said, let's get to it. Okay. Once again, if you are on YouTube and you find any value in the content, please go ahead and subscribe to our channel. And also, if you're on the Facebook group or on the Facebook page, please like and share, okay? Sharing is caring. Do not keep the information to yourself only, okay? Please share on your pages so that other people can be able to get the information. Okay, once again, dependent care, child and dependent care is one of the I would say lucrative, I would say credit that is
that's a good description for it.
Right, that is available, and a lot of people don't know about this credit that it exists. Well, or not aware of how much they can gain out of it this year. And so we're here to share, it once again with you. So got anything? Let me introduce my partner.
I was just about to say, you have not even introduced yourself.
Okay, I'm Helen DePoe, and I'm with Helen DePoe with Discovery Tax Services. So guys, a little secret about us, okay? Both, okay, believe it or not, we're a little bit camera shy. Okay, we have to come up here and share the information with you guys, but bear with us. We're camera shy. He's definitely a camera shy. I'm getting used to camera, but he has not gotten used to that.
Okay.
So, anyways, bear with us, and here we are. So let's get to it.
Get to the discussion. Yeah. So yeah, my name is Vonnie Washington,
Mhm.
and this is my beautiful wife, Helen Duper Washington, and she has been in the tax business for a long time, and I'm here tonight to
How long is a long time?
for over 10 years. I'm just here to provide her some support as we look at this issue of dependent and child care credit, which is a very important credit when it comes to tax filing, because this year that credit is fully refundable, so that's a very good thing. And so we'll be, just touching various points as it relates to that credit.
It has been refundable. However, it has been increased also this year to a significant amount. So, yes. Thank you. So let's get to it. So we're going to share the slide with you here. So if you have any questions, always reach out to us in our inbox. Okay, going forward.
Yeah, so we can start from there. Pretty much, like we said, it's fully refundable, as you can see, and pretty much you need obviously to have children or have some dependent in order for you to qualify for that credit. Without they are dependent, or having children, you cannot qualify for that credit. Obviously, as the name suggests, is for those with dependents,
All right.
or those with children.
All right. So as you can see here, again, it is fully refundable.
Mhm.
Taxpayer that care for a qualified individual
Mhm.
or a
qualified
qualified
individual,
individual
yeah.
are eligible. Okay.
Mhm.
The purpose of the credit is to allow taxpayer to be gainfully employed.
Yeah.
Okay. So if if you need babysitter, someone leave your child somewhere to look for a job,
Mhm.
or you're caring for your child and you have to look for a child care for see the purpose of seeking job, or just fully paying someone to take care of your child while you are at work. So for the parents that are working from home, okay, do know that you can hire someone to come into your home, care for your child while you're in the other room in the office working, and you are still qualified for this credit, even though it's happening in your home and you are there. As long as you are there and you're at that time you are working, you are employed, you are qualified for this credit. You can qualify for up to 4,000 for this credit for one dependent.
Mhm.
And if you have two or more dependents,
Mhm.
it's up to
Okay,
8,000 for the year 2021 taxes.
Right.
Okay. Let's see here. I'm going to share this slide with you once more. Okay, so ages. What are the ages that qualify for child and dependent care credit? Ages 13.
You got to be under 13. The
You have
child
to
has
be under 13. 13 years old or under. Okay.
They have to be under 13 years old.
They can be over 13 years old only if they are disabled.
Right.
Okay. So any child or any dependent, and again, that's another thing. The dependent doesn't have to be a child alone.
Right.
It could be an adult, and that totally dependent on you. They can be your parents, mother, father, uncle, auntie, anyone you care for. That fully depends on you. That's
Right.
what the dependent child and dependent care credit is. A child and dependent care credit. So it could be a child, it could be an adult, however. Okay. Now, if y'all have any specific questions regarding the credit, please feel free to comment in the comment section. Post your question there. It will really help so that we can be able to answer the question, and hopefully the answer can help others that are wondering as well.
All right.
Okay, adjusted gross income requirement. Here you have it. Okay. Do you want to go over this part? This section?
Yeah, pretty much. From the chat there, the first thing we need to understand is the deduction percentage. From the beginning, you saw that you can get a credit up to $4,000. Now that $4,000 is 50% of 8,000 worth of expenses. So up to 8,000 worth of expenses, if your income is below that 125,000, yes, you can deduct 50%. Or let's say you can get 50% of that back in credit, which would be $4,000. And you see that that credit starts to phase out as your income increase, as your adjusted gross income increases, that credit starts to phase out. For instance, at 124, let's say 125,001 you see, between that range to 185,000, you see that it drops from 49% down to like 20%, and it continues like that up to 438,000. Then you have no credit. You no longer qualify for that credit. So yes, it's kind of progressive. The more you make, the lesser credit, and once you hit 438,000, no credit. So yeah, the credit is income based, and so depending on your income, you could qualify for up to 50% of your total expenses. So again, if you had total expense of $8,000 in a child or dependent care credit, you could get 50% of that total child care expense back.
Okay. So basically, this means that it could reduce your tax liability if you have more income within these income bracket within this range. You may not get a refund, but it could help to reduce your
tax liability.
Your tax liability.
Right.
Yes.
So that's the benefit to having refundable credits. They either reduce your tax liability, or if you don't have a tax liability, you get that back as a refund.
All right.
So the work requirement pretty much, as was stated in the beginning, you must be looking for work or have a job. Now, talking about looking for work, at the end of the day, if you're looking for work, by the end of the year you did not find a job, which means you don't have earned income, you don't qualify for this credit. But while you are looking for a job, all the childcare expenses, yes, that's something you can get the credit for. But you must have earned income at the end of the day in order for you to qualify. You want to add anything?
Well, it pretty much spare everything out on here. As you can see on the slide, basically that's what it's for. At the end of the day, to claim this credit, you must have
earned income.
Mm-hmm. To report, and must also have a proof that you did pay for dependent care.
Yeah.
Someone, if it's a child care, they will provide you a letter.
The daycare. Yeah.
The daycare will provide you a letter from their company letterhead with their EIN number for you to be able to file it on your taxes.
Right.
If it is an individual, when you're hiring an individual, let them know that this income will be reported and that they need to provide you with their Social Security number so that you can be able to file it, put it on your taxes.
Right.
Without any proof, unfortunately, you cannot claim the credit, because you will be, as your tax preparer, we are required to fill out a form in our system that justify that you did, qualify for the credit.
Right.
So
you got to provide
those are
some
the requirements. We
you got to
need
provide
the tax
the
ID or the Social Security number.
Okay, so the changes in the tax law. Pretty much, there were some changes made in the tax law between 2020 and 2021. Pretty much, it has to do with the Rescue Act, and so that's pretty much what increased the child tax credit threshold.
Mhm.
If you look at the slide, you see that the qualifying expense went from $3,000 to $8,000. So even the percentage, you see that it went from 35 to 50%. So you stand to gain a lot more this year in filing your 2021 taxes with this particular change in place, because now you are getting a credit of up to 50% of your qualifying expenses for child care.
Mhm.
So it's a big, big, big,
That's a big difference. And then
Yeah.
if you see on this slide here, it said from 2021, it was not refundable.
in 2020.
I mean, in 2020, sorry, y'all. In 2020, it was not refundable, and it was up to what?
The
What was
maximum
it?
was 1,050.
1,050 was the max
Yeah.
in 2020.
So that's
But
35%
come
of that
2020,
$3,000. Yeah.
right? Come 2021, it is fully refundable up to $4,000
$4,000.
$4,000 max. So, guys, that's a huge difference. That's a huge jump, and it's fully refundable, meaning whether or not you have a tax liability, you will get the credit, you will get the money.
Yeah.
So, if your taxable, if your
your
tax liability is less,
Mhm.
and if you're actually getting a refund, you get the full refund. It is fully refundable, meaning you get an extra $4,000 add to your credit if
Yeah,
you
if your
pay
tax
for
liability is zero.
child care or daycare,
Yeah.
or any dependent that you pay someone to take care of so that you can find a job or be able to work. That is amazing. Next.
So the qualifying expenses, what is considered qualifying expenses? Pretty much, you keep hearing daycare. So it can be expenses for daycare, preschool, after school program, household help. You mentioned that, having somebody in the home to take care of the child. Even day camps qualify. So those are, possible qualifying expenses that will qualify you for this child care credit.
Mhm. So I had a question earlier from someone that said, "Can I qualify for the credit? My child is going to a what is it? It's a private school. It's a modeling. Okay, model agency.
It's an after school program.
No, it's a private activities being paid for the child. Unfortunately, that's not one of the qualification. If your child is going to a private school or taking any type of private lessons for their, I would say what for their intellectual, what do you call that? That does not qualify. So you're educating your child. That's fine. Now, so when it comes to the education credit, you having to say, oh, my child is in private school or whatever. That's an entirely different situation there.
Yeah. So
for
I'm
the
glad you mentioned
purpose
private school.
Mhm,
Okay. So private school is one thing,
mhm,
but if it is an after school program,
mhm,
as you can see on the slide, if it's an after school program, that you are paying for, then yes, because the essence of the after school program is to keep the kids, busy so that the parents can pick them up later,
and go to
because the
work.
parents are still at work and cannot pick them up. So normally they will put them in after school program so that they will go through their day. When they're done, then they can go and pick them up,
Right.
because that's after their regular school program. So yeah, if it is an after school program, yes. And another important thing here is, for those that got more kids, um, their credit does not look at they don't look at the expenses evenly.
Mm.
Okay, what does that mean? Say you have two children. One is maybe 6 years old,
Mm-hmm.
and one is maybe let's say 12 years old,
Mm-hmm.
and you have the 6 years old in the let's say after school or daycare program, and you spend up to 9,000, or maybe let's say the full maybe 16,000.
Mhm.
Let's put it that way. 16,000 worth of expenses. That's 16,000 worth of expenses pretty much for two people.
Mm.
But look at the fact that the other child is not in any daycare program.
Mhm.
All the expenses still qualify. The whole 16 still qualify, even though the other child is not,
Mhm.
because both of them qualify. You got two children, so that total 16 qualifies. For the credit.
Nice.
Yeah.
Nice.
So that parent could be getting up to $8,000.
Wow. Man. Anybody have a child they like to adopt? If you do,
Stop that.
we need a baby.
Stop that. Okay,
But
so let's look
anyways,
at the next slide.
all right. I think I already mentioned this: the name of the person or entity,
Mhm.
Social Security number or EIN number, the address, the amount paid for child and dependent care.
Yeah.
So that's what you would need to bring to your tax preparer when you're claiming this credit.
Right.
Okay.
So you mentioned that earlier. So what does not count?
What does not count? So it said here one parent work and the other doesn't.
So the other parents stay home.
Stay home, they can take care of the child. Unfortunately, you cannot.
So you can't be claiming that credit.
Right. Married couple filing separately
Doesn't work either.
does not work. You don't qualify for the child.
Yeah.
For the credit. I mean, okay. You
made a child. You made the payment to your child.
Made child care payment to your child under 19.
Doesn't work either.
Doesn't work that way. Meaning you cannot go claim the child and say the big sister or the big brother take care of the payment to take care of the child, and then turn around and claim the same big brother or sister on your taxes. Doesn't work that way.
That's another part. For children, if you look on the slide, for children like that would not be even a kid at this point.
Right.
But like for your 19-year-old, if you made payment to your 19-year-old or your older, dependent, possibly, if you made payment to them, yes, you could claim that. But then you cannot claim them. You can't claim them as your dependent when you file your taxes.
Mm-hmm.
So you can make payment to them and then claim them as your dependent as well.
Right.
Yeah. So you got to choose one.
You got to choose one.
Yeah.
And you cannot make your payment to your spouse.
No.
You cannot say, my husband take care of what? No, it doesn't work that way. Believe it or not, these things do happen. Okay. So, and we're just here to help you understand so that you don't get questioned later when in time of audits, because it does happen. Audits happens. It is random. Nobody know when and how it's going to happen. So having the right information to put on your taxes and filing it the right way from the very first time is very important. Yeah. We have had people that get audits that have absolutely nothing. Their stuff their case is just clear. Half of the time, IRS just want to.
Audits are just verification. That's all about it. It's not a big deal if you have all the relevant information. It's just a matter of verifying. That's all about it.
All right.
If you claim dependent, care credit, and you provided the information for whoever you made those payments to, that information should be verifiable. That's all about it.
Okay. Yeah. So we're on we can at this point tidy any other tips or answer your questions. So if you have any question, please type away. I'm going to check our YouTube and check the Facebook to make sure we are not leaving anyone's question out. So go ahead and Got anything to add?
No, I mean, we've gone over everything, so it's just question and answers. If anybody got any question, maybe you can address those questions. But this is a good credit to take advantage of. If
It
you
definitely
qualify
is.
for it, it looks real good.
hmm And one of the things I want to stress about this credit, as I mentioned before, um, a lot of people, we get a lot of people, and I'm going to speak specifically to the African community. We have a lot of people that pay grandparents or other individuals that are not working childcare. Like I have one right now. They pay over $6,000 for the year in childcare. And I said, well, why don't you reach out to that individual and ask them if they can provide you their social security number. She's like, I don't know if they'll do it.
That
I
doesn't
don't
work.
think they're gonna do it.
That's
Well,
that's
and I
complicated.
said, if you want me to, talk to that individual, I will.
You know they have to report the income.
Because I mean, they have to report it, and that's the part they don't understand. You can report their income and file your taxes. That's earned income for you. You have expenses,
But
the child is in your house.
the question is whether they want to do it.
Again, that's what I'm saying. If you're looking for a child care person out there and they're not willing to cooperate, maybe then you need to think twice about it, because nothing is free.
That's why I say it's complicated.
It's complicated, but it's not that complicated.
That's a discussion for another day.
They don't know they can file their own taxes too. That's the problem.
Yeah.
So nobody.
I'm not seeing any questions. I think we can wrap it up.
Mm-hmm. So, anyways, those are it.
That is that. Mm-hmm. Go ahead.
Mm-hmm. All right. All right. So, the other thing is that we are going to start seeing refund coming out here.
Right.
Starting next week. Okay. So, even this week or next week. Make sure, if you are filing your taxes, the fastest and best way so far is to do direct deposit. It's faster for you and it's quicker for you.
People still do checks.
Make sure that you are. People still do check, and with our checks, you can cash it from Walmart. For up to $8,000, you can cash it over there for a fee of less than. I think it's less than $6.
Why would I want to do that? That's the question.
Well, I mean,
when you have a bank account, why can't you do direct deposit?
Other people can do it. Other people can do it. Other people prefer it.
I guess it's preference, yeah.
All right.
Okay.
All right. Well, let us know if you need bookkeeping, if you need tax planning, if you need to file your taxes. One more thing. We are running a special promotion for the month of February, as in celebration of the Black History Month. We are giving out 25%. We're giving a discount of 25% of your tax prep fee. So if you have not filed your taxes yet and you're sitting on it, do know that you can bring it to Discovery Tax Services and get 25% off. That's a good chunk you can get off of your taxes and file it at an affordable price. Okay?
That's good.
All right. Again, that offer ends February 28th. So to take advantage of it, hurry. Thank you guys so much for tuning in. Thank you for listening to us. If you have, again, any question and need any of the services that we provide, feel free to inbox us and we'll be happy to help you. Thank you.
Thank you for your time. You have a blessed night.
See y'all later.